Now, Teera, in 2007, you came up with the concept of creating this Emerging Asia franchise. What prompted this?
I have been traveling around the world in the last 15 years. When I travel around the world, what I see and I compare with the developed country, I see a lot of investment opportunity in emerging Asia. Emerging Asia is relatively under-researched compared with the developed country. Then I look at the structural growth driver in emerging Asia. You have a lot of structural growth driver compared with developed countries that are already well developed. There are three key structural growth drivers that drive emerging Asia in the longer term. Number one, favorable demographic. 45% of population in emerging Asia, or 1.5 billion population, are still young. This young population is joining or will join the labor force. When they start to join labor force, they start to produce GDP. Then they have money in their pocket. They start to consume even more. For you have strong domestic consumption. All this is support secular GDP growth in emerging Asia. Then you look at number two, strong domestic consumption. You look at penetration of a consumer product in emerging Asia. Start with refrigerator, with the car, mobile phone, or internet penetration. We're still far below developed countries in the world. All these going to have a lot of growth to come in terms of consumption in emerging Asia. Then, number three, you look at significant increase in infrastructure spending. You travel to developed country compared with emerging Asia, you see that emerging Asia is still not well developed. They need a lot of infrastructure. They need road, they need power plant, they need the new airport. And all these structural growth in terms of infrastructure mean that you have a lot of investment opportunity to invest in this emerging Asia.
Let's say we've entered a period of low growth in the developed world, and let's say the global economic environment remains very fragile. Would these structural drivers still be in place?
This structural growth driver in emerging Asia remain the same, remain strong. And this is a good long-term fundamental of emerging Asia. However, the market have a high volatility lately. Basically, there are two main concerns that the market have. Number one is monetary tightening in China and India. Number two is a debt problem in Europe and in the United States. If you look at it, inflation in China and in India is expected to be peak in the coming month, because you can see that global commodity price start coming down. And second, if you look at the monetary tightening in China and in India, we close to the tail end of the cycle. Now come back, look at valuation of this emerging Asia. Today we trade at 10 times price to earning ratio. It's one standard deviation below historical average. The valuation is very attractive. Long-term fundamental of emerging Asia remain the same. For it's a good time for long-term investor to invest in emerging Asia.
Your fund, you describe it as being truly emerging Asia because of the way it's constructed. Can you elaborate on this?
My fund is different than any other Asia fund that offer in the market, because my fund invests only truly emerging country. This truly emerging country is basically the country that have low GDP per capita, have high GDP growth, that have structural growth driver that I mentioned. The country are China, India, Indonesia, Malaysia, Thailand, and Philippines. The fund do not invest in Korea and Taiwan, because we look at Korea and Taiwan like the developed Asia. How we look at developed Asia, the country have high GDP per capita, the country have low long-term GDP growth, very cyclical to the developed country in the world. By excluding Korea and Taiwan, the fund have high weighting or high exposure to the truly emerging Asia country.
So we have the core countries, China, India, ASEAN ex-Singapore, but then you can also invest in frontier markets, so the likes of Bangladesh, Pakistan, Vietnam and Sri Lanka. What's your view on these markets at the moment?
The frontier Asia market have very good long-term investment opportunity, good economic growth in the longer term. However, at this moment, I do not find good investment opportunity in frontier Asia. If we look at Vietnam, Vietnam stock market have come down a lot, but the liquidity of the market is not there for you to invest. The capital market did not drop in the last 4 years since I first visit them. Then we look at Sri Lanka, have very good long-term economic growth, but the variation is very high. For I find more attractive opportunity to invest in the core emerging Asia like China, India, Indonesia, Malaysia, Thailand, Philippines, because the market already come down, a lot of good investment opportunity there. But I believe that I continue to spend my time to see the company in this frontier market. And at some point in time in the future, at the right time, at the right price, right opportunity, I think that my fund is well positioned to invest in emerging Asia.
There's no doubt you manage or you look at a very interesting part of the world, but because it is emerging, how would you describe your investment process and how do you uncover investment opportunities?
I spend most of my time to visit the company, to visit the factory in different countries, and I visit the competitor, the supplier, the regulator, the government regulator, and also global multinational company that compete in this market. Then I come back, my analyst and I spend time to look at accounting standard of these different countries. I also spend time to look at management track record of all these companies. By doing extensive research, it enables me to pick the good and best investment opportunity into the fund.
Thanks, Teera.